Alright, we see that the market is flying. The SPY, QQQ, and many of our stocks are performing very well. And of course, as always, when we see a move like this, we start to wonder if it's an overreaction or not, if it's euphoria and greed that's driving the market right now. So in today's video, we're gonna analyze the technical points that define greed and fear and which could be turning points for the market in the near future, always using technical analysis to guide our thoughts and to define our strategies. Welcome to the Finance Hydra channel. My name is Nathan. It's a pleasure to see you guys over here. Here you'll find unbiased analysis every single day, so welcome to another video here in the Finance Hydra channel. Now, as we can see here, SPY is materializing a very good bullish reaction. We are leaving Friday's high behind, materializing another all-time high. There is not a single bearish reaction. There is not a single top signal over here, right now at least. Even if we see a top signal suggesting that SPY could lose momentum in the next few days, we have many support levels to hold the price, namely the $574, the previous top level over here, which did act as a support level for us in October 10 over here. It is our next technical support level if and only if we see a top signal materialized. Right now, no top signal. Nathan, what if we lose the 574? We see the 21-day EMA, the exponential moving average over here, acting as another reliable support level for us. The most dangerous support level, long-term speaking, is the 565, because it is not only a support level, but it is also the previous top level observed on the weekly chart over here. By losing the 565, SPY would trigger a long-term pullback on the weekly chart. So far so good. We are quite far away from this support level, so the situation is still under control. But if we see pullback, let's not panic, because pullbacks are totally expected, especially right here, right now, because SPY is approaching a very important resistance level. But Nathan, resistance level? SPY is around its all-time high right now, so there are no resistance levels for the SPY. Yes, there are, because we can use Fibonacci over here. Let me teach you guys how to use Fibonacci. When we use Fibonacci to project our next targets, we can just set our retracements near our top levels, near our previous top levels over here. For instance, let me exemplify here to you guys. For instance, here, the first technical target of this Fibonacci's projection is the 38.2 projected in the direction of the latest breakout, meaning $594. If SPY breaks the 595, then we project the 50% retracement, and if SPY breaks the 50%, we just project the 61.8% Fibonacci's retracement. Right here, right now, we have yet to hit the first technical target, which is 595, around 595, the technical target of this bullish pivot point on the daily chart. And the 595 is a quite interesting technical target because when we use Fibonacci over here to project the target of this bullish pivot point, the first target is 595 again, all right, of this bullish pivot point over here, this higher high, higher low. We have yet to hit these targets over here, but we are heading towards a very important target using Fibonacci's projections. Therefore, 595 is a technical target for the SPY on the midterm, on the daily and weekly charts as well. So we are approaching this key point. There are no top signals yet, so if you ask me, SPY has more upside potential. But if we see pullback, let's just observe how it is going to behave around its support levels. Remember, the trend is still quite bullish. When we take a look at the QQQ, this one is making a phenomenal breakout. It is breaking the 593, the previous the previous gap resistance level over here. We are leaving this support level behind. I'm so sorry. This resistance level behind, and right now, short-term wise, it is technically a support level for us. So if we see the QQQ correcting, making a pullback on the 1 hour chart, for instance, it could easily correct to the 493, to the 21-hour EMA over here, and that's okay. The bullish bias will technically persist, will technically remain intact. Only if we lose this double support level on the short term, we could see a sharper correction on the daily chart, possibly to the 21-day EMA over here. However, as long as we stay above the support levels, well, the all-time high, the $503.52 is our next technical target. That's where I see the QQQ heading to, only unless if we see a crystal clear technical evidence suggesting that it is going to materialize a pullback. Otherwise, the bullish bias will persist until a clear reversal occurs following the tenet number 6 of the Dow theory. All right, so the situation is still under control over here. Nathan, what if the QQQ breaks the all-time high? Well, if you ask me, there is a technical target for us, which is the resistance level of this ascending channel. All right, and then we'll see how the QQQ is going to behave next. But for now, let's focus on the $500 all-time high, all right, because it is our next technical target. And how all of these signals are going to affect our stocks. For instance, Nvidia is performing very, very well. We at the 5% project, we bought over here near the 21-day EMA. It was our latest buy signal. Right now, there are no other clear buy signals on Nvidia because the reason is very simple. Always buy near support levels, sell near resistance levels, because the risk-reward ratio is better near support levels. If your trade goes wrong, you're gonna lose little. If it goes right, well, then you're gonna make a lot of money, much more than you are willing to risk. Therefore, it all depends, to me at least, according to my strategy, it all depends on the risk-reward ratio. Right now, we are near resistance level, so it is not necessarily a good buy right now, but I do agree that there are no technical top signals over here. There is not a single bearish reaction suggesting that Nvidia will collapse or trigger a pullback ahead, all right? So the most important key point is the 136, which was our second target over here. Now, by breaking and closing above the 136, our third target is the $140, the all-time high area over here, all right? We have yet to hit the all-time high. We are very, very close, like $2 away from the all-time high, but it is still a technical target for us. What could possibly trigger a pullback over here? If Nvidia makes a crystal clear top signal, losing and closing below the 136, then I will see a possible materialization of a pullback ahead, all right? And again, any pullback to the 21-day EMA or maybe even to the 130 over here could be just another harmless pullback in a bull trend. Pullbacks are just buying opportunities when we see a crystal clear bull trend. All right, it's a very simple situation, just like we did over here. If we see any bottom signal near the 130, near the 21-day EMA, it will be just another buying opportunity, all right? And remember, if you want to follow our strategies, just join our educational project, the 5% project. Try our free trading room for 1 week, completely free of charge, and get us as a bonus our ebook on technical analysis, also for free. So just join us over there and learn how to make consistent profits in the market. For more information, just take a look at our website, link in the video's description. Now, regarding Tesla, this one over here is a real mess, all right? It is clearly bearish, unlike everybody else over here. It is clearly bearish below the 21-day EMA. The 21-day EMA is pointing downwards. We are below very important critical inflection points that are now acting as a resistance level for us. So even if we see Tesla bouncing, making a bottom signal over here, any bounce to the $233 area, or maybe the 21-day EMA could be just another dead cat bounce, because Tesla has been doing lower highs, lower lows, all right? In theory, we are heading towards our next technical support level near the $200, all right? We don't see any meaningful bottom signal. There's not a single meaningful bullish reaction suggesting that it is going to bounce. If we want to see Tesla actually reversing this bearish bias, we gotta break the $230 area, we gotta break the 21-day EMA, and of course, we need to see Tesla making higher highs, higher lows again, all right? Only then we may focus again on the 265, which apparently is the most important resistance level for us on the long term, all right? Now, if you ask me, but Nathan, is there any chance that Tesla will recover? Yes, there is, because right now we are above the 21-week EMA, which could act as a support level for us. In addition to this, we have earnings in 9 days, all right? And the volatility will certainly increase over here. So we could see the materialization of a bottom signal above this support level. The problem is that we don't see any technical evidence supporting this bullish thesis right here, right now. So for now, we gotta pay attention on how it is going to behave over here on the $200 area, which is our next technical support level, and of course the 230s resistance area over here. Now, regarding AMD, this one is trying very, very hard to react above its double support area, 21-day EMA and 162. By materializing a bottom signal over here, AMD will just reinforce the bullish momentum, because the trend is still bullish. We are still making higher highs, higher lows, all right? There are no lower highs, lower lows yet. However, if we see AMD losing this double support level, then it is going to actually reverse the midterm trend over here, materializing a very nice bearish reversal, and in this scenario, the 148 is going to be our next technical target. If we see AMD reacting and breaking the 174, then okay, AMD is going to technically trigger another bullish continuation chart structure, possibly to the 187, which is AMD's most dangerous resistance level. Just like Tesla has a very dangerous resistance level on the 265, AMD's key point is 187, because it is a classic turning point observed on the daily and weekly charts alike, as we can see here by this red line over here, all right? So it is a very dangerous inflection point. We gotta break the 174 in order to seek this key point next. Meanwhile, we see Palantir very close to the all-time high. This is fantastic, all right? Palantir is almost at $45. On the weekly chart over here, we see how impressive was this drop, and how impressive was this recovery as well. We observe a very nice, near perfect inverted head and shoulders chart pattern on the weekly chart over here, right around the bottom of Palantir. So this is a classic chart structure which suggested a very nice bullish reversal over here, all the way up to the all-time high. Now, Nathan, is there any top signal? Is there any bearish reversal? Is there any bearish reaction over here right now? No, there is not a single bearish reaction right now. There's absolutely nothing suggesting a reversal. On the 1-hour chart, we are still making higher highs, higher lows. We are still above the 21-day EMA. On the daily chart, we don't see any top signal over here, and even if we do see a top signal, Palantir could correct all the way down to the 21-day EMA, and that's it, all right? The trend would remain intact. Any pullback to the support level could be just another buying opportunity. Broadcom is another very good one over here, because this one, the 5% project bought near the 21-day EMA, this one already hit our target, all right? And right now it is losing momentum. The key point over here is 180. Only by losing the 180, Broadcom is going to actually trigger a sharper correction ahead, possibly at least to the 21-day EMA. But if you ask me, we could lose the 21-day EMA by losing the 180's support level over here. So right now, if you ask me, it is a quite delicate situation right under the 185 resistance level, which was our technical target over here, all right? So it is struggling to break a very dangerous resistance level. We gotta break this key point 185 as soon as possible in order to continue the bullish bias. Meanwhile, we see ARM Holdings flying more than 7% today again, alright? ARM Holdings is another stock that we bought over here near the 21-day EMA, and right now it is just exploding. It is flying a lot, way above our first technical target, around 152, the previous resistance level. Now, if you ask me, we are heading towards the 173, our next technical key point, and there is not a single bearish reaction suggesting that we could reverse this bullish sentiment. Only if we lose the 152 again, rejecting today's bar, I see ARM Holdings actually frustrating this midterm bullish sentiment on the daily chart, alright? But so far so good. It is breaking our target. We bought ARM Holdings over here near the 21-day EMA, right above this purple trend line over here. A very obvious bottom signal near a very important support area. Since then, it is just exploding, let me see, roughly 16% in just a few days. So remember to join the 5% project for more information, for more trades like this. Now, NIO is a very dangerous one because it is losing a critical support level, $6 area, near the 21-day EMA. By losing this key point, NIO is reversing the midterm trend. It is now bearish on the daily chart, suggesting more bearish continuation to our next technical support level, $5.97, all right? So far, there is no bullish reaction suggesting that it could frustrate this bearish scenario. Only if we see a miraculous reaction breaking and closing above the $6 again, we could see NIO actually having a chance of continuing this bullish bias over here, maybe to the $7 again, all right? But so far, the situation is very complicated. There is not a single bottom signal right here, right now. And of course, I will keep you guys updated every single day in this channel, every single day, unbiased analysis, working professionally, defining strategies, using technical analysis, price action, statistics, and much more, without any guesswork, gut feelings, right? No assumptions, just technical analysis. So subscribe to this channel, click the like button to support me as well. Thank you for your audience, my dear friends. Stay safe. See you guys tomorrow.